Numbers, solid result, and what do you expect? Is this going to continue?
Was a solid result and the market's rewarding it, up over 3% today. First half profits up significantly, 70%. Also saw revenues up around 10%. This was largely driven by an increase in their coal haulage and also increased port activity. Now, Asiano is the second largest player within that coal haulage market on the east coast of Australia, and they did make some inroads within Queensland where Aurizon's actually the dominant player there. But I think this overall profit result was quite positive because it hasn't been the easiest trading conditions for a company like this in the transportation industry. But there was, I think there's a lot to like about Asiano moving forward. They're very positive on their growth targets and growth forecasts. They're targeting around 15% growth per annum in their earnings through to 2016, and they look on track to be meeting these kinds of targets. We saw around 14% growth last year, probably looking for around 15 to 16% in the full year this year. So looking at the outlook, I mean, transportation and the logistics sector which it does operate in is a highly cyclical area, and if you're looking to sort of bet on a recovery in the Australian economy within the global economy, then this kind of industry is one that will significantly benefit, and Asiano obviously very leveraged towards that. So they're exposed to both imports and exports through their ports business, as well as their inland transportation of containers and freight, and also the largest operator of interstate rail in terms of freight. So very leveraged towards economic activity. So if you are sort of betting on that takeoff in the Australian economy, this would be one stock to look at. There are a few risks for this company, though. I'd say probably the key risk for Asiano moving forward is within their coal haulage area. The outlook for coal and coal volumes is a little bit volatile moving forward. There is a little bit of uncertainty there, so that would be one to watch. But in general, I think this was a solid result, and I think we can expect to see solid results to continue from this company.
Talking about something at the other end of the spectrum today, certainly Mount Gibson, you know, profit down about 70% there in the half, and shares being punished today, although they have recovered a little. What do you think? I mean, has this market reaction been quite overdone?
I think it was a little bit overdone. Certainly the 15% drop we saw early in trade was certainly overdone. We've seen the shares pare back around 10% of those losses to be down around 5%. But if we look at the result, I mean, yes, profit did slump 71%. They had to sell more low-grade ore. But you look at it, I mean, iron ore price that they received for their products had fallen down to around $96 a tonne. But you've got to remember, these results from the final 3 quarters of 2012. It's a backward-looking result. So far in 2013, iron ore's actually averaged $152 a tonne, and they did boost their sales, total sales up 56%. They reiterated their full-year sales guidance of 8 to 8.5 million tonnes. But I think the problem for Mount Gibson probably is within the iron ore space, it's probably not the best pick within the sort of the solely iron ore exposed miners. They don't actually report cash costs, but certainly their cash costs would be on the higher end of the scale when compared to other players. So I think their cost-cutting plans of $120 to $150 million is going to be very important for this company moving forward and being able to meet those cost-cutting targets. But also their growth prospects aren't quite as good as some of the other players. We have seen that they will probably look to expand through acquisition. They've also shown some interest in sort of coking coal assets as well, which is also an input into steel, and fundamentally I suppose is fairly similar. But I think the concerns will be whether the new projects, if they do acquire some, if these new projects are actually going to produce the same kinds of returns that existing projects will, and if it's actually the best use of shareholder funds. So within the iron ore space, I don't think Mount Gibson's really probably the best pick. Probably prefer someone like Rio, Fortescue or Atlas Iron because of their lower costs and because of their higher growth prospects moving forward.
Overall, looking at the market today, is it a kind of a reflection of what we've just been talking about too? You know, stocks going in opposite directions off the back of their results, a real mixed read today on the markets, but you know, it is starting to push higher now.
That's right. Aussie market has moved higher now. It's being driven by the cyclical end of the market. Actually, we're seeing some good gains, particularly within the energy space. Woodside Petroleum up 1.5%. Also the materials, BHP pushing higher, and also some of the industrials doing well. Property sector also up around 1%. But you're right, the earnings results have been a little bit mixed. We've seen some really good results and some pretty poor results today, and the share prices have reacted as such, and these earnings results have been what's driving the market more recently. But I think Well, what I have been watching is the underperformance of resources in general over the last little while, and we've seen some of those big underperformers start to break through key resistance. If we look at Woodside Petroleum, for example, serial underperformer over the past little while during the market rally, it broke through $36 around 4 days ago. Since then, it's rallied about 5% in 4 days after breaking through that resistance. And if you look at BHP, broken through $38, which is significant resistance, it's consolidated a little bit, but really if this rally can continue, I think the resources that are breaking through resistance could be the driver of the rally. And interestingly, we've got BHP out tomorrow with its results. The share's rising today 0.6, 0.7%. So I think there's a good chance that we could see a surprise to the upside within the BHP results, which would be a massive positive for the resources sector in general, given how diversified BHP is. And one further, I think, positive we're seeing on the market at the moment is some significant volumes coming back in. Around $3 billion traded today so far, and last week we saw a string of over $5 billion days. So maybe some of that cash on the sidelines starting to move into the market, and that's really helping to support